Have you ever heard of the Fibonacci Trading tool, or maybe you've heard of it and you don't have an idea of how to use it? Hold up, don't worry. In this video, I'm going to teach you a Fibonacci trading strategy that can help you catch lots and lots of pips in the market. Hi guys, and how are we doing? My name is Tradewithbolu from Tradewithbolu online services. If it is your first time on this channel, so a big welcome, and if this is not your first time, welcome back. Please don't forget to hit the like button, and definitely I hope you've subscribed. So let's get into the business of today. So remember, I said I'm teaching you a Fibonacci trading strategy. Yes, I call it a Fibonacci secret strategy that can help you catch lots of pips in the market. So first of all, what's a Fibonacci tool? A Fibonacci tool is a trading tool or an indicator, okay, but it's actually a tool that helps you to measure the extent of retracement of price. So that means when price moves, in order to know how much it will retrace, then traders make use of the Fibonacci trading tool. Okay, and how is it used? I would advise traders to use a Fibonacci tool in trending markets. What I mean trending markets that are either trending to the upside, which are uptrends or downtrends, not really in consolidating markets, because consolidating markets are just moving between support and resistances. So there's really no extent of retracement because it's always either to the support or to the resistance overall. So it's best to use a Fibonacci tool in trending markets. And let me just dive in straight into the secret strategy. First of all, a disclaimer: never trade a Fibonacci blindly. So you don't just go to your chart and draw out the Fibonacci and say, okay, I'm taking trade off a 61.8. Oh my god, yes, it's a buy. Don't do that. Fibonacci tool is just an extra layer of confirmation to your original buyers. Okay, so you've already marked out your setup, you've drawn out your support, you've drawn out your resistance, drawn out your trend line, understood why you'll be taking a buy, then you bring out your Fibonacci and it's all adding up. Then it's like 3 or 4 confluences and then you jump in for that buy. But don't trade a Fibonacci in isolation ever. Don't attempt to do that. So let me go into my chart and jump into how to use it as an extra layer of confirmation. So for example, this is GBP USD, and I can see the market is trending to the downside, making series of lower lows and lower highs. Okay, and I would use my Fibonacci tool on the time frame I'm using to execute the trade setup. So I want to execute on my 1 hour time frame, and this is where I would use my Fibonacci tool. Yes, I'll use my Fibonacci tool on the 1 hour time frame. All right, I know this is insight. Yeah, when I mean insight, price has happened, so I'm just kind of like playing out what has happened before. So I'm an ICT based trader, and that means I trade based off order blocks, liquidity pools, and the like. So yeah, what I would have seen is I would have seen a liquidity grab of price here, and I would have seen price give me what I call a breaking structure, which is first of all an internal breaking structure here before an external breaking structure here. And what I would have highlighted is simply this order block. All right, but then I would have been expecting price to come back here. This is where I now pull out my Fibonacci tool. So I would first say, let me first explain how a Fibonacci tool. A Fibonacci tool has remember I said it measures the extent of retracement. So these numbers are just percentage of retracement. So when I say 38.6, it's telling me a 38.6% retracement of the original move that has occurred. Do you understand? So it's either a 61.8%. Those are what these numbers indicate, but let me not get into this mathematics. Let me just explain how this strategy works. So I've already given a bars, and I'm looking for an extra layer of confirmation. Then there are 2 different zones I like dividing my Fibonacci into. One I call the deep zone or the shallow zone. You either hear it as a premium or discount zone, but I like it simple: deep zone and shallow zone. My deep zone are the 78.6, 70.5, and 61.8. But my shallow zone are the 38.2, 23.6. I really trade off those zones because what the big players want to either buy from low prices or sell from high prices. Okay, they want to try to buy at very low points or sell at very high points. So I go into the deep zone. That's where I'm looking to take my trade from. So then I pull out my Fibonacci tool. So to get it from your trading view, it's this second, you'll see it here. It's always in a tool where you see Ghana Fibonacci tool. So just select your Fib retracement. From here, which is my impulsive swing, I want to know the amount of retracement I'm expecting price to reach. So then I would pull it, and remember I'm looking at my 3 zones. All right, which is 61.8, 70.5, or but my optimum trade entry value is always 70.5%. 70.5% is optimum trade entry value. So that's where I'm going to take my trade from, and you will just see how price came into and tapped into it. And also, if you want to be a very conservative trader, okay, sorry, it's a short position. Let me tell you where you put your stop loss. Okay, it's always advisable to put your stop loss above 1 because it invalidates the retracement. But this is a very wide stop loss. This is a very wide stop loss because I'm trading I'm taking my trade off the 1 hour. But if it was a lower time frame, it will be a shorter stop loss. So now let me look for another sample to the upside, and we would call it a day for today. All right, so this is another sample I'm seeing clearly. All right, where price has broken structure, and then I would have confirmed this other block as a bias, but then I pull out my Fibonacci tool to give me an extra layer of confirmation. And what am I saying? Price is retracing off the 70.5, 78.6 zone, which is what my deep zone where I want to be taking a trade from. So I know these are insights, but remember, Fibonacci tools are used as extra layer of confirmations. Don't just trade them in isolation. Don't just trade them in isolation. All right, and the best place to put your Fibonacci, your stop loss when using a Fibonacci, is after the 1, because it tells you that once price reached it has invalidated that whole swing retracement, meaning that trade is invalid. So I hope you've been able to learn how best to use the Fibonacci and how best to catch those large pips in the foreign exchange market. My name is Tradewithbolu from Tradewithbolu Online Services. Bye for now, and don't forget to subscribe. Bye for now.